The living legend Warren Buffett said, the Oracle of Omaha said, when you look for a company in the stock market, all you have to do is look for a genius CEO, look for a great business model, a great product, and a great way of delivering that product, and then you buy. And when the shares go down, you buy more and more if you believe in the company. I've been talking about Sofi Technologies for a while, even when it was down in the $5 range. I was telling my subscribers, I think it's a good buy because they check all these boxes. And I see this company as being a big company in the future. Now, some people came out here in my video yesterday and said, I missed the boat on it. Well, I don't think you missed the boat on it because this is still at rock bottom levels compared to where I believe this company is going to go. They made a big spike yesterday due to the earnings call, and I want you guys to take a look at this video real quick, and then we'll discuss some yummy for the tummy stuff. Take a look at this video, guys.
Shares popping double digits on those strong results, almost up 23% right now. CEO Anthony Noto joins us. Anthony, thanks for being here. Big quarter for you all. Profitable one, record revenue across the three businesses. Solid profitable outlook as well. What are some of the key drivers that you think led to these results?
Well, Leslie, thank you for having me on. You know, I'd say the strategy overall has really come into play and delivered exceptional results for the quarter. 6 years ago, we embarked on this very ambitious strategy to be a one-stop shop for all your financial services needs. When I joined the company in February 2018, we were primarily just a lender in two products. Today, we offer not just 4 types of loans, including home loans, but we also offer SoFi Money, which is a modern checking and savings account, SoFi Invest, SoFi Credit Card, insurance products, and we also power 140 million accounts across the fintech industry through our technology platform that we outsource to our partners. This quarter really reflects the fact that the financial services segment is now profitable and growing quite meaningfully. The tech platform business is also profitable with accelerating growth. And that's really the drivers of growth going in 2024 and less of the lending pieces. So it was a combination of that strategy over the last 6 years being invested in and then coming to fruition in 2023 with record revenue of over $2 billion and record EBITDA and actually hitting our long-term EBITDA margins at 30%. And as you mentioned, GAAP profitability for the first time, which will sustain in 2024.
Yeah, and of course, this all comes against a macroeconomic backdrop that for a lot of lenders remains uncertain. And you have a pretty conservative outlook for 2024, baking in a 5% unemployment rate, 4 rate cuts, which is, of course, fewer than the market is pricing in. So what are you seeing in terms of customer spending trends, portfolio quality that is helping to inform your outlook for 2024?
Yeah, you know, as you mentioned, we did take a very conservative view on the lending part of the business for 24. We are expecting 75% year-over-year revenue growth in our financial services segment and 20% year-over-year revenue growth in a tech platform, and really no growth in lending because of that conservative view that we're taking. We do expect credit to normalize. We're seeing those trends across the industry as well as at SoFi, and so we're taking a very cautious view there. In terms of underlying spending trends within SoFi Money, we had $1.6 billion of point-of-sale debit spending in the quarter. That's annualized at about $6 billion. It's up 3x from a year ago. We're seeing strength within existing accounts, but we're also adding new accounts, so it could be a little bit misleading. In addition to that, we have been observers of the broader market dynamics. We've seen some levels of liquidity dry up in certain markets. In addition to that, the largest banks have seen an increase relative to 7 and 10-year highs in write-offs, delinquencies, and then the provisions for losses of one of the largest banks were up 50% sequentially. So we're really bullish about our financial services segment, which is growing quite well, 75% for next year, and tech platform, but conservative on the lending side.
Hey, Anthony, some of the macro stuff that got commentary in the earnings last week was about real wage growth rising again after 2 years of shrinking. Is that starting to make itself felt within the metrics?
We're not actually seeing an impact on spending. We are obviously seeing a normalization of credit back to pre-COVID levels. So that's where it's showing up on the spending side. That is still strong, but the credit side across the industry as well as at SoFi is definitely normalizing, which is why we're taking a conservative view. The unique thing for SoFi is that in 24, 50% of our revenue will be from technology platform revenue and financial services, and 50% from lending. In previous years, it was as high as 80%. So we've gained scale and profitability in those two segments just in the right time as we enter 2024 and the concerns on the credit side.
SoFi offers 4 types of loans, including home loans, a modern check and savings account, SoFi Invest, SoFi Credit Card, and insurance products. Insurance products. The technology platform it outsources to partners assists 140 million accounts across the fintech industry. He added that the latest quarter really reflects the fact that the financial services segment is now profitable and growing quite meaningfully. And this is just the beginning for this company, guys. Just like NEO, this is just the beginning. And this is what I believe is going to happen with NEO too. Once we bust out the sub-brand, watch what happens, guys. And once we continue to build out the battery swap stations and partnerships, etc., etc. But anyway, the tech platform business is also profitable with accelerating growth, and that's really the drivers of growth going in 2024 and less of the lending pieces, Noto said. Analyst, this is from the analyst, this guidance rocks. So it was a combination of that strategy over the last 6 years being invested in and then coming to fruition in 2023. Now notice, this took 6 years. 6 years. This is why I keep saying, when you believe in a company, don't listen to the animals, the negative Nancy's, the trolls, the shorts that's going to come and try to convince you why you should sell. I did not sell my SoFi. I kept averaging down as much as I could. So Noto said the unique thing for SoFi is that in 2024, 50% of the company revenue will be from technology this year, platform revenue and financial services, and 50% from lending. Now that is very peculiar that he would say something like that, because the Chinese president, Xi Jinping, said that most of their revenue this year is going to come from technology. And I said that to you guys, even during an economic slowdown, I expect the technology companies to do well, just like NEO with their battery swapping system, etc., etc. In previous years, it was as high as 80%, so we gained scale and profitability in those two segments just in the right time as we enter 2024, he said. So I'm not going to go into the whole article, but Guilfoyle, Guilfoyle is the analyst name. He has been bullish on NEO since it was $4. And he said, who cut his teeth on the stock exchange in 1980s, has been sweet on SoFi for a long time, and he's been recommending it. Since it was trading below $4 a year and a half ago. So this man has vision when all the other analysts were saying, oh my God, I don't know. And this is what they do. So he said, Guilfoyle said that he's giving this a $13 price target right now. And I expect more analysts to come out and even give a higher price target now, probably $14 and $16, and you're going to see the stock continue to move forward in the near future. And in the long future, I expect this to be a $50 stock. So I hope you guys found this video to be informational and inspirational. I am happy that some of my subscribers who listened to me and who also already had this, hopefully I gave you guys the confidence back then to hold just like I did. And now we're going to get some money, guys. So I hope you guys found this video to be informational. If so, guys, don't forget to please hit that thumbs up. If you haven't yet subscribed, you might want to think about doing so, because in this channel, we have that warrior mindset. Like 50 said, we get rich or we die trying, guys.